showing you about J and J stock, and just click there and click enter in Google, and you can see the name of the here, and you can see market cap is in billion, which means it's a big size firm. Dividend yield here. So dividend yield, if some firm is paying dividend, that means they're financially strong. It's a positive sign. They're financially doing very good, because after paying their liabilities, costs, and everything, they still have money left. That money they pay as dividend to shareholders, which is brilliant. And then just go to Wikipedia and you will see a box here, and you can see founded in 1886. And then I just want to show you one more thing. Just copy that and you just find out that the reviews in Indeed, and you see what the employees have to say about it. And you can see 4,400 reviews and 4.3 star. Read through the reviews yourself and see that in Glassdoor as well. And you can see the reviews, 6,000 reviews, 4 star. Read through the reviews yourself and see Justia patents and paste that here there. And you can just see that you can search for the patents if there's any. I will just I can't see any patents actually, but there are a lot of pages, so just go through yourself and make sure that you are concentrating on assignee or applicant, because that's the one who has the rights of the patents, so that's important. And just go through everything yourself and just have a look. And now I want to go to Yahoo Finance, and I want to see the executives and everything, so I'll just paste here. And you can just see there's so many names here. I don't know which one to click, but you should know that your symbol J and J. Click there. I'll just show you the symbol again from Google. You can see the symbol here, J and J. This one we are searching. So click profile, then go to sector and industry. You can see all that employees, and you can see all the information of key executives, their salaries and everything. That's important, because the more information we have, the more trust we are able to build. Now let's have a look at Macro Trend. That's a brilliant website to find out the ratios. Click price ratio and price book ratio. If the ratio is less than 1, that means the stock is discount, and the stock is at discount, and it means that it's a sale. If it's less than 1, if it's 1, that means that the stock is at its real price, and at least it's not expensive. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. To let it load. Okay, so I want to see here, it's 5.87, which means the stock is nearly 6 times more expensive. If I see in 2011, it's 2.14, which means the stock is twice more expensive. If you just see vertically up, people who bought in 2011 March, they paid $46 to buy something that was $21 worth, so they paid twice as much. But right now, it's if somebody buys right now, they'll be paying 5 times more money, or nearly 6 times more money, which is very expensive. And so you need to make sure if you're buying an expensive stock or not. Click other ratios and go to current ratio. And in current ratio, if the ratio is less than 1, that means stock is very risky to buy. If it's 1.5 or more than that, that means stock is safe to buy. There's a margin of safety. So we are looking at 1.5 or more than that. You need to be patient with this website, because it takes time to load, because it has a lot of data. So don't worry, but it will make your life very easy. And so it's just loading right now. So I'm looking for 1.5 or more than that. Right now it's a little bit less than 1.5, but let's look at the previous trend. So it's like fluctuating, I guess, but I can just see a trend here. So if you notice that since 2007 September up till 2017 March, so nearly 10 years, up till 2017 March, it's a very safe stock because it has been always been above 1.5. That's brilliant for 10 years. But just recently, from 2017 June, it reduced from 1.5, and it's a risky stock, and it has been continuously like in 2018 it's a safe stock, it's a safe stock, it's a safe stock because it's more than 1.5, but then it came back down. So it's fluctuating, it's not consistent. So you need to be careful about that. Let's look at debt equity. Debt equity tells me if the stock is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that. Right now it's less than zero point 0.5, it's a safe stock. Let's look at the previous trend. So has it ever been above zero point 0.5? It has been above zero point 0.5 in 2017 December, a little bit up, so I wouldn't mind that. Let's go back and see. Yes, so it's brilliant. So since 2005 up till now, it's always been below zero point 0.5. So it's a very safe stock in terms of debt equity. So in terms of debt, it's a brilliant stock because it's always been below zero point 0.5. Let's go to return equity. For this one to be good, I'm looking for 8% or more than that. So let's have a look. I'm looking for 8% more than it is more than 8%. That's brilliant. More than 8%. And then it came 2018, it is less than 8%. So since December 2017 up till September 2018, nearly 1 year, it's below 8% and a lot below 8%, but still it has been a positive return. And then the previous trend has always been above 8%. So since 2005 up till 2017, it's always above 8%. And then for a year, it's below 8%, but then back again above 8%. So maybe I might forgive the 1 year, but it's up to you to decide because it has been always been above 8%. So